Good morning, guys. Welcome to this Thursday, March 12th. And market is overnight. It started overnight to the downside. Popped down pretty hard. From holding on pretty darn good all most of the day. We just found ourselves in a little pop to the downside. Yes, we were probing these single prints M prints in the afternoon for a while. They managed to close above the 67 60s, and then suddenly look at the open, but boom, straight down to 67. I don't know what that was all about, but then that's what happened. And they've pretty much been holding here below the support area now to 67 60s for most of the day, so or most of the overnight. So we'll see what's going to happen. I don't know. It's not a great sign if you want to hold on to the gains we had made. So we will see if they're going to be more of the same, or if they're going to be more of this weakness, or they're going to see a little bit of strength as the day session kicks in. We have news come out this morning at 8:30. We get housing starts, you get international trade, you get jobless claims. We have a nat gas report at 10:30. We have a 30-year auction at 1. So that's what we get. I don't think any of that's going to really move the market in a big way, but I think Friday is shaping up to be a big day. Durable goods, GDP, personal income, that's your PCE index, yes, consumer sentiment, job openings, all are happening on Friday. So Friday is going to be interesting. Friday the 13th, nonetheless. So yeah, you're going to be up for something. But given the overnight, I would just start off with a slight bias to the downside. To see this overnight is going to turn into get some follow through on it. And if it doesn't, we may find ourselves back above that 60s again. So that's going to be the area toward 67, 60s. So they're going to be able to get that taken care of and get back up above it. Or as long as they stay below it, we're going to start with a bias to the downside. So initially, I'm going to look to sell strength against the 6740s, the 50s up to the 60s for rotations down. I'm going to look to buy weakness very cautiously at the 30s, 15s, and the 6700s for rotations back up again. So I'm not sure how strong these guys are. They could be. It's down here against this ledge, which looks like something's forming here in terms of a support area. But if it doesn't, the next level down is going to be all the way down here to 6640 before we start finding some good support again. So we may be in for a little bit of a downturn here if the follow through starts materializing. So initially starting with a slight bias to the downside, looking to sell strength at 6740s, 50s up to that 60 level. Taking to it up above the 60s, I would be taking off the short bias. One level outside the obvious would be 6780s. So I would still look for a short shot up there, but if they can hold above the 6760s, I think we're in a good shape to potentially take this higher. One level outside the obvious, always the ones you consider 6780s for that potential short. But if they take out both of those, we are back up in action here. So, and we really want to get it back up to the 6880s. I mean, we got a little bit of ways to go to get back up to this attractor area. So right now we are in a weak spot. We're in a spot where they potentially could take this a lot lower, and we'll see how this whole thing develops as the day session kicks in. Now, if they take out the lows at 6,700, just stay on the short side at that point. Again, I would look to buy against the 6730s, the 15s down to the 6700s. With a bit of caution, not going to be super aggressive on those buying opportunities. I would prefer to try to get on a short trade if it looks like this weakness is starting to materialize. And usually in the morning, it tends to be a little bit harder to get on that short trade because it's so whippy. You either look for a pullback, and if they hopefully you don't get into that, they run it lower and then whip it back to the mean, and that's kind of shake everything out. So that's always the issue, right? When you try to get in on the pullback, get as good trade location as you can. If they take you out, don't immediately re-engage it because you don't know if they're gonna try to run it higher. In other words, you see that happening sometimes. Usually you're at the low or the end, you start extending towards the low end of the range. So if they're down here at the 15s or the 20 or the 6700, start pushing the lows. That's where and they start backing off. That's when you need to be really careful. because you don't know if they ran it down there and they stalled, and suddenly you get this hard retracement all the way back to the mean, and that could, I mean, you can't sit in a trade like that. You can't repair a trade like that. So you just had to make sure you stay there. I mean, you see me fall in that trap a few times. It's I think the biggest. I mean, falling in a trap is one thing, and actually hopping on a trade which doesn't work, but it's making it bigger, which is the trap. In other words, you try to repair the trade to get out, but you find yourself being squeezed all the way until they shake you out. And on the Nasdaq, we are in a spot where we are in the value area on the Nasdaq. So on the Nasdaq, we haven't really taken out these support areas, but we are a little bit off the highs. We're further off the highs than the ES is. So, but this is where they've been building value for quite a while. So the Nasdaq looks like it's holding things together for now. And I would just do the same thing there. Look to sell strength against the 870s and the 930s. One level outside the obvious would be up here at the 25,000s, rotations down. And I look to buy weakness with a fair amount of caution against the 24,800, the 750s, and the 690, 680 to 690s here, rotations up. Below 680s, I would be staying on the short side and see how far I want to take it. Just be mindful when it comes down there, selling a pullback, it gets less and less viable, if you wish. You want to try to get in early on it. If you're going to getting in late, you're chasing the rundown, or that's what's going to happen. If you're chasing it, you're getting in late and late in the sell off or late in the rally, whichever it is. You always have the risk for that retracement, getting stuck in that retracement. So it's better to, if you're missing the initial part of it, it's better to just let it go instead of trying to be too cute about it. Selling it low is always an option, but it's always fraught with the issue that you get stuck in the middle of the volatility. So if it whips back at you just a little bit, you get risk getting shaken out of that trade. But that's also an option. Sometimes just if there's enough momentum to the downside, just selling the low and then hoping you don't get shaken out is a very viable way of doing it. It requires a little bit of guts, but because it's not a very comfortable trade, you have to make your stop a lot bigger. But if you get a little bit of room between yourself and your entry, then you should be in good shape. So that's kind of where we get started on the Nasdaq. So Nasdaq range bound, I would keep a bias to the downside to get started, and see if they can retest these lows, potentially take it lower. And Nasdaq has to kind of take out this 650 see before we start worrying about the short side in the big way. So if they take out this 690s, I would give it down to the 600 in this general range. Probably confirmation below 600, that would take us just shy of this lower level. So you have an area here, a little bit of a twilight zone. So one level outside the obvious, still looking to buy against that 24,600s on the Nasdaq. So that's kind of how we get started on these two. Now, I send out an email on the contract rollover. So after the 13th, after tomorrow, we're going to be rolling to the June expirations. I hope you got the email. So tomorrow we're trading March still, and on Monday we have rolled to the June expirations. Okay. Now bond market is that was a pretty good sell-off yesterday. That was an unusually rough day. They sold into the open, a little bit of strength at the news came out when the news came out, and then a straight shot down here. They're down here to the lower 114s. Now they're finally pulling up a little bit from there. So they took it quite a bit lower. So they overshot the attractor area. As you can see, they took that out and with a little bit, and then they haven't quite gone down there. You see how these ledges are. The 113 is the one to pay attention to now. On the way down, they start trading below that one. Things could get pretty gnarly. But as you can see, this goes back to June last year, and the bond market hasn't quite moved all. That's going back and forth in a pretty tight range. So the analysis has been pretty darn one-sided. Range-bound trading. Right now, I would just look to sell strength up to that level, up to the 26s. So looking to sell against the 16, 17, and then up to that 26 level. And then if they take out 26, I don't know if you can hear my dog snoring beside me. He's snoring pretty loudly. I mean, the noise cancellation mic should be taking that out, but he's freaking snoring up the storm here. It's fun. Anyway, so looking to sell up to that mode here at the 26s. And if they trade above that, I would look for a retracement trade. Can you hear him snoring or not? If you can't, that means my mic doing its job. Oh, good, good, good. That means that I have a noise cancellation mic, and I should take out that sound. It sounds like a freaking sawmill in here, you know. So anyway, so looking to sell strength 16, 17 up to 26 is here for rotations down. Above 26, I would look for a retracement trade higher. And that could certainly be the case. Sometimes you get these big sell-offs and then you have pretty much a straight up day in the next day. But we'll see how it goes on the bonds. They overshot the attractor, so swinging back here to the 115 would be not a bad assumption, right? So I would start off range bound on the bonds, looking for some early strength, see if you can get short, and then see if they're going to continue retracing it or not. Now, if they start taking out support at 09 and the 114.04, then we could certainly see this head lower in a big way. So there you go. That's the bond market. Pretty straightforward stuff going on there now. Back to the ES and the NASDAQ. And we got about 10 minutes or so before we get news. And everything is kind of overlapped. Nice little runs here in the morning, right? A nice little straight down to the mean. This is not run on the NASDAQ. It's 930 down to 8. So, okay, 100 points right here. 100 points, 400 ticks. And ES is from the 60s all the way down here to the 30s, like 30-point run on the ES. So pretty good runs going on here. So it looks like it doesn't look like super choppy. So we'll take that for now. Volume wise, we are at around about 200 and where are we? 250,000 contracts. Yeah, 260,000 on the full size. On this guy on the micro ES, 450 and 500 on the NASDAQ. That's a lot of contracts on the micro ES. So these micro contracts are really getting some volume. With the kind of volatility we have, I guess fewer and fewer people can trade the full-size contracts now. But anyway, we'll wrap it there, guys. So good trading. It's Thursday. We kind of know what to do. Starting off is looking for some early weakness to see if we can. They're going to take this lower. If we get early strength, we're looking to sell against that early strength, at least initially. And then let's see if they can, if that 67.60 is going to hold. On the NASDAQ, it's going to be the 930s there. So, alrighty, guys, we'll wrap it there. So good trading, and I'll see you back at 11:30 for the next update later.